Bonds, what are they? I'm sure you've heard this term thrown around in the investment space a lot, but what are they really? Let's have a super quick look at covering off 5 points on what bonds actually are. Bonds are debt securities issued by governments, organisations or corporations to raise capital. When an investor buys a bond, they're essentially lending money to the issuer in exchange for periodic interest payments and the return of the principal amount at maturity. Consider it like an IOU, so in so many years I'll pay you back like I would pay back a bank. Bonds are considered fixed income investments because they typically pay a fixed interest rate over the life of the bond. This predictable income stream makes them attractive to investors seeking stable returns, but remember, rates today will likely be very, very different to rates in 10 years. The bond is not variable, it's fixed, so make sure you're getting the right advice. Bondholders receive regular interest payments. These are known as coupons or coupon payments at predetermined intervals over its life. The interest rate is specified at the time of issuance and is based on factors such as the prevailing market rates and the issue's creditworthiness. In simple terms, how big a risk is it that you're giving your money to them? The bigger the risk, the bigger the return should be. Bonds have a maturity date, which is when the issuer repays that principal amount back to the bondholders. Maturities can range from a few months to several decades. Short-term bonds, often called bills, medium-term, notes, and long-term bonds. I'll be happy to go further into some of these details in the future. What is very topical now is interest rates, as they have been. Rising in the past few years, bonds have actually seen an inverse relationship with interest rates. The price of existing bonds in the market is influenced by changes in those interest rates. So when rates rise, the value of existing bonds out in the market tends to fall, and vice versa. This relationship is important for investors to consider when managing bond portfolios or understanding that a bond fund manager is actually managing these price risks actively within the fund that they're buying and selling in. Understanding these key points helps investors make informed decisions when incorporating bonds in their investment strategy. I hope this has shed some light on what bonds actually are, and I'll see you next time.